Expectations. That makes me nervous, Stevens. He says he was shocked at his final score. Expectations were, pretty high that we had a strong market posture coming into the beginning of the year. Bullishness on the election. There we go. Bullishness on the election, and everything was tip top. And it's just been teetering and continuing. Like we dropped down to the fours and we held, and we thought, well, can we break out and salvage something for our cyclical bullish spring? February, March, April, before we hit that notoriously sideways summer doldrums. Sell in May, go away. Yeah. We didn't get there, did we? I heard Trump talking to the president of Ukraine. So weird. Yeah, I gotta say, for me, that was felt like a couple of, couple 15-year-olds like making a 7-year-old apologize or say thank you. Like I was just like that didn't sit well for me personally. That didn't feel like American exceptionalism. And it didn't resonate well across the world, that's for sure. Anyways, let me get this password in so this is going. Okay. And that escalation to me is not isolated from the tariffs, where I believe that type of volatility that we saw is prone to using tariffs in a punitive fashion, right? To countries that don't say thank you. I don't know, man. It doesn't feel right. I gotta say that to me, we don't. I don't know. Are we gonna score that into? It doesn't score in other than in the VIX. But woof, it is a weird feeling right now. The way that it's like, what are we looking for here? And when you look around at the trades and you look at the aggregate analysis of our watch list is strong. It is full of market leaders, sector leaders, high volume, high liquidity. Whew. It's tough, right, Kami? I mean, that's that didn't feel like. Anyway, let's try to hit the market pieces of this, and let's just keep a hopeful tone, I guess. Welcome everyone to the Market Watch Group Sunday Market Insights. As always, this is for education illustrative purposes only. We do not give recommendations to buy or sell any security or financial product. We're not brokers. We're not advisors. What are we going to do? Let's talk about our posture. Here's the deal. Is it, does it get us a bit nervous? Of course, but can we still trade? Yeah. What have we talked about? Well, the need for two new types of potential trades two new arrows in our quiver. Bearish, first of all. That's a question you should ask yourself. Are you comfortable trading in a bear market? What does that mean? You'll hear an old saying that stocks have a tendency to walk upstairs and fall out windows, right? So it's not like, this smooth, like, oh, it just turns around and goes the other way in the same fashion. No, that's not what happens. It drops hard and fast, and then it might recover hard and fast, and it's like it can whipsaw. So if you feel like, no, Scott, my answer to you is no, I don't feel comfortable, then my advice would be paper trade this round. Cash is a position in markets like this, and get your paper trade out and get ready. And if you find any specific opportunities If you find any specific opportunities, either direction, where you're like, hey, I feel like I'm starting to get a hang of this, and then you can start putting skin in the game in a measured fashion. So maybe the market is trying to rally, Sandy says, and Clint says the last hour it went back up. Are the buyers back? Well, those are the questions, right? That was the last hour. Steven's assessment that incorporates the last day had him a bit spooked. So we'll see where it puts us. There you go. Steven said being picky. 75% sexual bearish, 90% with a few bullish. We're going to be more discriminate is what it means, right? We're not, that's what it means. Focused, concentrated. Congratulations on that. Let's get going. Okay. We'll posture. We'll look at the economic calendar. We'll kind of keep our eye on the sectors. Watch list maintenance is ongoing. We'll just discuss what our ongoing maintenance is. And then we'll have early week opportunity list. Trading plan. So if you're pretty new, we're on section 7 of 8. And it's a good place to actually start, because basically what we're on right now is record keeping and analytics. There's never a wrong time to start those things. So if you're just coming on, download the logs. If you trade options, get the option log. If you trade stocks, get the stock log. If you do both, do them both. But get your record keeping intact. That's section 7 and section 8, 6 and 7, which is record keeping and analytics. And that's what you need to be able to then work on section 8, which is improvements, right? That's the improvements. When we don't just fix things, we look for things to fix. How? Well, record keeping is a great place where you can say, you know what? I really need to get my average loss lower. I need to, right? There's going to be things you notice from the data that is going to then translate into how can I create rules in order to accomplish that objective. So it's start with a problem statement. Don't create a solution and then find a problem for it. Find the problem and then create a solution for it. Okay. I'm curious what I saw a picture come in from Bob. I didn't see what that was. Zach's call spread. Huh, okay. Interesting. That's a Zach's tool? I'm not familiar with that. Is that just like a spread calculator or something? Interesting. Okay. All right, let's get into it. The charts are up, or at least they're ready to be up. Let me grab my charts. Yeah, I'm a bit nervous of where we're headed on the posture today as well. I thought we could be down to 3, possibly into the 2s. Let's get this down. I'm just adjusting my lower panels so I have more room up top. And let me get my posture. I need to go update the historical log. But I do keep a historical log for the group. So if anybody wants to go back and see what is the posture historically through, right, almost 2 years now that we've been going on this. Almost 2 years. And you can go back and actually just go connect it yourself to kind of see what we as a group, led by me in a consensus fashion, create as a posture, which you can kind of see, hey, what happens in a correction? What happens when the market starts to, how does this thing tend to help us, bring to the table for us? Okay. Long-term trend. So we scored this down last week. Why? Because let me get to that time frame. Because it did not get to this upper level. So that weakness of not weakness, that lack of strength of not getting up there. And in fact, we said if it had closed back at this low where we were prior to, so I will say this, you guys, those of you who are pointing at Friday's end of market action to say, what about that? Look, I hope I'm with you. I carried some bullish trades. I hope that it plays through. And in this situation here, and again, you might be out there saying, Scott, I hear people say all the time, hope is not a trading strategy. Yeah, of course not. Yeah, but I'll tell you this. I always hope to be bullish. You make more money bullishly than you do any other time. Right? Can you make money in any market? Yes. Can you make money equally in any market? No. That's silly. It's the easiest. Everybody's a genius in a bull market. You've heard that, right? that should tell you. That should tell you what we hope for by way of market conditions. Our conditions will be 5s, 6s, and 7s when we have strong trends and whatever else. But you can see that this trend is as strong as it has been the last little bit, and really looks a little more like that. So I was going to even take another 1/4 of a point if it didn't hold the bottom of the red line, but it held. You can see my candle held. Gave me a little, not quite a hammer, if you're wondering why not. Hammers from candlestick patterns, the shadow or the wick, the tail, has to be twice as long as the body, or in this case, the head of the hammer. So it's not a hammer, but it's a similar type implication. That what happened? The sellers were down here and then pop back up. Okay. So, good news. My number stayed the same. I am maintaining this as a 1. I'm going to give it a chance. Now, if next week it breaks down that line, then next week it drops. This will be, right? It's not like an opinion. I've decided what analytical trigger will make this drop, and if it crosses, it will drop. I'd like to hear from you guys. This is my last chance. I'd like to hear from you guys. Where are you at on your long-term score? I'm a 1 out of 2, so I'm bullish. Is it as strong as it was through here? No. But is it still going up? Yes. That's where I am. Do you see it similarly? Do you see it differently? Let's get a bit of dialogue going on our analytics today as we move through the analysis. Bob Rowland agrees. So no, those of you who brought up the buyers at the end of the day, I agree. It was a good enough run that it's going to be helpful in a few pieces of our analysis. Looking better. So here's the deal. Let's talk about the other side. So I've marked a 1/4 of a point if this score drops. What if it get the other way? If we take out this high, that's all I need. I don't need it to get back to the top of this. I just need it to take this high out. And then I'll give it that 1/4 of a point that I took away back. That's at 613, we'll call it 25. 613.25. If we're above 613.25 at the end of next week, I'll give it a 1/4 of a point back. If we're below whatever the red line is next week, which is around 594.25. So we better have a sideways or a positive week. If we have a negative week and we're down here, it will lose another 1/4 point for me. All right. And now we have the short term. Yeah, I kind of feel like it has to lose a quarter of a point, right? Like there's no way to avoid that. I was at 1.25. Now, here's the thing, you know. Yeah, it's losing a quarter of a point. This low was intact. And we are thinking, hey, this it could be like this, right? But at this point, nah. Tony's like, yes, thank you, Tony, for your bold assertion. He agrees. It has to. You can't take out a low. You cannot take out a low and not receive a demerit. I don't know what we call it. Lose points for that, that's for sure. Even though it came back, it got to it, but not back through it. Right? So if it had gotten all the way back up to, whoops, give me my marker back. If it had gotten back up here, just a little farther, not that much farther, I probably would have been like, no, I'm going to leave it alone. But it didn't. It didn't get there. It got stalled, and it got stalled right at this. Yeah, minus a quarter. Um, wait, are we daily versus weekly? Bob Walker, are you looking at the 3-year weekly or the 6-month daily now? You and I have different SPY candles for 228. Is that what you're saying? It should. It should be. It should be right. You can see the 5 looks. Okay, no worries. I do like to look. Sometimes you'll find chart inconsistencies. It's good to check. Okay, so I am going to then go ahead and knock this down to a 1. So that is down a quarter of a point. And let's just ease into volume because that one was crazy. We got to talk about volume. Let me really quickly move this back to 7. There we go. We finally got some vol. You mean the buyers finally got some vol on Friday? Because it was we did get vol all week long, every day but one. We had this one doji pause here, but if you look, that was Friday. And then we go Monday down, Tuesday down, Wednesday pause, Thursday down, Friday up. So at this point, and this is what I was saying, you'll notice we have one sell day way over here that's basically off the chart now. So we're not even going to care about that. All we care about is this pocket. And this pocket of volume, this is going to be with us. And in a scoring position, 1, 2, 3, 4, that's 1 week, 1, 2, 3, 4. For 2 weeks, it's going to be scoreable. After that, it'll sort of drop into the getting stale. But this chunk right here, 1, 2, 3, 4, 4 sellers, 1 buyer. 4 sellers, 1 buyer is a minus 0.5 for me. Let's talk about it. Agree, disagree. That's what we're scoring. So in order for this to go back to a minus 0.25, what would we need? We would need at least 1 buyer day to pop that thing because that would then be fresh. That would give us a 4.2, and that would put us back into a, you know what, that's more reachable. So Stephen D is optimistic. We can get it next week. We can get it back. We can get that. I agree with him. We only need one unopposed buying day. Unopposed meaning if we have a big buy day and then a big sell day, that's going to make us a 5-2. And a 5-2, it's still on the bubble, but I'll probably keep it at a minus 0.5. It's got to close that gap, right? So we'll see. But yeah, anyone disagree with the score that I have? Yes, the Heiken-Ashi. Okay. Let me know if you think differently. If you're new and you're just sort of like, if you're new and you're like, I don't want to ask a question because everyone else all know what they're doing. We don't. None of us know what we're doing. We sort of do, and we kind of get it. We just put together routines and processes. Like I have a pretty good idea, but we're constantly adjusting here. So ask the question. I promise it would lead to a great conversation if you're willing to do it. Would make me so happy. Bob Rowland says, no, we don't. Okay, let's go. Yeah, that one's definitely dropping to a minus 0.5. So far, it was interesting because like on Wednesday and Thursday, I thought I was going to be dropping a quarter of a point on each of these, but that last minute rally on Friday afternoon salvaged the quarter of a point for the long-term score, ironically. So it's funny to see that. And that's it right there. The only thing that we know as blades of grass is that the lawnmower is always right. Whatever height it's set at, that's what it's supposed to be. Okay. Major market. Let's go. Where are you, major market? Here we go. And this needs to start over. May as well get this one going too. Remember, if you're new, I suppose there's an old recording to learn the vocabulary and scoring system more than a recording. Thank you for that question. More than a recording, there's an entire course. And if you don't know about the courses, then there's, probably, I don't even know, 40, 50 hours of static content for you. So there is an entire, this is an easy one. Those are like 15-minute videos where we're going to walk through why do we care, how do we score it, right? So yes, each of the 6 components is broken down into that 15-minute video. So that one you can do in an hour and a half, just like bing bang, you're feeling better about it. There is also an entire course with each section of the trading plan, all 8. There's a video per 8. There's a course on that. There is a first options trade course, a first stock trade course. So if you're like brand spanking new and you want someone to hold your hand through every step of decision making for a trade, there is a trading foundations course that just kind of walks through like all aspects of the foundations you should have as a trader. And then there's an options foundations course. So yeah, like thank you for asking that question because I should probably flag that content more. What I was going to flag was if you see a link, it's available on the site. Like go to our links and be like, hey, I want to go see the sector rotation. Yeah, people are like, do I need to sign up for that? No, just go click the link and bam, you'll have exactly what I have. Anyway, okay, let's go. What do we have here? Apparently my links are not good right now, so I'm going to start over. Hold on here. Sorry. Well, now I'll just go show you exactly what I mean. I just got new internet, too, this weekend. Come over here. And let's go. Oh, everything is unresponsive. Apparently, I'm overloading my system right now, you guys. Hold on. Talk amongst yourselves for a second. Okay, here we go. Are you working? Still not? Okay, maybe this is good. Thank you, Sandy. The short version. Love that. All right. And if you hadn't put it together yet, and I would assume you probably had with this, is we're looking at each of these components to give us this final score. This is out of 10. It doesn't get to 10. It's not like I've ever had like, oh, this is a 9.5 market. Yeah, I mean, come on. I'm very reluctant to score things at the highest score they can be because it's like, well, then what happens if it gets better from there? Right? So it does get there, but not that frequently. And so, you know, this is just keeping us oriented on market conditions. Because I can tell you right now, if you're new, the number one mistake that most traders make, there's a top 10 mistakes document that's available to you. I should actually put number one is just getting conditions wrong, right? It's a funny thing when I work with people and they'll go back and they'll be like, oh, I started and I did great, and then it started to get bad, and then, you know, I think and it's funny because I could look at a SPY chart as they're describing it, and I'll go back. This is a game I used to play in my own mind, and I'd be like, oh, so you started, I'm going to guess around late March. They'd be like, how did you know? Because I could just trace the conditions of their performance. It wasn't them learning or not learning. They did well when the market was bullish, and then when it gave back, they gave back, and if they made adjustments well to position sizing, they came out okay. But, right, a lot of times it has to do with conditions. We've put on some great, I want you guys to think of we've had some great bull trades where everything was perfect, and then it wasn't that the trade fell apart, the market did. Something with tariffs, something with news, right? And so that's the point of why it's speculation and why we spread risk and et cetera, et cetera. Anyway, okay. Quick soapbox moment before we move on. Okay, did everybody, thank you, I saw, so it said, Scott, I hear you just fine, but I can't hear conversations with other participants, and hopefully that got explained. Keith, thank you for bringing that up, that it's just, I'm just responding to the chat. And when I first come in, I make sure that everybody can chat with everyone. So everyone's chat should say to everyone, but I do encourage everyone to chat with everyone. And I'm just going to kind of jump in there, keep my eye on it, bring it in, look for questions. But that's where it's coming from. So if you're watching that, you're going to be seeing exactly what I'm seeing. And thank you everyone else for flagging that as well. Okay, major market. Let's get to it now. What are we doing here? I'm at 200 days. You can see that the leadership of the NASDAQ is still intact, but just barely. And you can see that the Dow holding it's sideways. Things are starting to converge in here. And what was bullish is starting to look a lot more defensively moving. Not defensive yet, but the orientation is changing, hence our score having dropped from a 0.5 down to a 0.25, and we're almost down to a neutral point with this. It could even be now, right? So we start at 200 days, that's about 9 months, and now I'm going to go to 133. That's 6 months. If you're not sure what this analysis is doing, it's taking the four broad markets, NASDAQ, Russell, Dow, S&P, and it's putting them at a same starting point 200 days ago, 9 months ago. They all start at 0. And then it says who's leading, who's lagging, right? Now we're going to change the starting point to 133. And in 133, it actually, the NASDAQ is holding up. So from here, it's holding its leading position. S&P's good. The Dow is still in a third. But I'll tell you whatever interest we saw motivated by the election hasn't just waned, it's completely disappeared, right? You'll notice that we're back where we were prior to the election, essentially, with small caps. So yeah, that's tough, right? That alone inhibits the ability for us to score the market to a certain level of bullishness. Let's keep going. Let's drop down. This is showing us what? Appetite for risk. What's the appetite for risk in small caps? No one has it. No one wants to get into small caps if there's concerns of inflation. Why? Because if there's concerns of inflation, what is the Fed going to do? Keep rates high or raise them higher. And that's not conducive to business for small caps. When we think that the Fed is going dovish and going to be very accommodative, small caps will rally. That's not where we are. You can see that. They're at the bottom. You can see the convergence on our scoring day. The NASDAQ has given it almost all the way back. Now, this is still in third. I'm going to leave it at 0.25. If somebody took theirs to 0, I don't know. I think I'd be like, oh, I can't make an argument. Like, I can't make a strong argument. I just don't feel like it's triggered yet. The NASDAQ is still just barely holding that leading position. But yeah, the Russell is a dog at this point. Can NASDAQ carry us without small caps in a bull market? Yes, unequivocally. Like, we shouldn't be concerned if that's a dynamic that can be supported for an extended period of time. Yes, we don't need small caps for a bull market. That's why we can still keep our score at a 0.5. We need them for a strong bull market. But we do need the NASDAQ, right? We do need the NASDAQ. So all of us who are like hopeful that, hey, maybe the buyers come back, that's got to be this week. It's got to bounce. We've got to see the buyers bounce. If it continues in this frame and we see this, I'm going to take mine to neutral. Okay, so that's where I am. I'm going to leave mine at a 0.25. I'm going to drop to 22 days. Tell me where you're at. Those of you, now, if you're not comfortable yet, great. But if you are, now here's where if I was like on the fence with my score, if I was like, I don't know, I'm back and forth between lowering it or keeping it. If I was truly on the fence, what I would have done is I would have gone to the tiebreaker, which is here at the 22. Right? And if I come here to the 22, what would it have told me to do? I would have knocked it back down. Would have put it to it. Right? If I was thinking keep it or lower it, I would have lowered it. I wasn't there yet. But this 22 day, this is daunting. Right? Look at it. Russell at the bottom. NASDAQ close behind. And who's at the top? The Dow. I mean, honestly, like I'm a little bit thinking that this might motivate me to go back and knock it, even though I hadn't. That's how weak this looks to me. Weigh in, you guys. Should we? Should this be a neutral score now? Should this be a 0 instead of a 0.25? Or do we let the 66 prevail? I think I'm going to let it prevail because I said it before I scored it. So I gotta stick to my guns. Because it maintained its leadership position, I stuck with it. But look at that. Even at the end, where the NASDAQ and the Russell are still falling, and you see the Dow just take that little hook back up. It's feeling more and more defensive in here. So I'm going to keep my mildly bullish score to 0.25, but if let me know if you lowered yours. Steven, where did you end up? I'm very curious. Okay, let's keep going. I'm going to reopen my close tab. Boom. Let's see if this will work now. Oh, gosh, I have new messages. Sorry. Um, I was just told that I have bad charts. Let me go back. um, that's a great call out, you guys, because I had some weird issues, and then I wasn't seeing your messages. Let me go back to 133. I'll reestablish. Um. Oh. Yeah. No, you're right. 133. 133. You can see the Dow is there already. Let me go to 66. I think I might need to drop it. There's the tie. There's the tie. And there's the drop. So what happened just there, you guys, if you're new? Sometimes at the bottom, and there's no reason, like, I can't ever see why, but like right there, it looks pretty close to the right, but it's not. It wasn't anything that I did, but sometimes you just have to like move it all the way to the right. And you'll notice everyone's like, move your slider, Scott. And I just couldn't see the chat because I was like stuck a little higher up on the chat when I was talking to someone. So let's just reverse that back to 133. 133, the Dow popped to the top there. Now that's not enough by itself, right? Because when we then got to the 66 and we zoomed into the 66, and you'll notice there, did it again, so I'm going to move it over. When we got to the 66, it's tied. And we're like, oh, it's tied. What should we do with the tie? Well, even the tie itself could have motivated me to lower my score simply because the tie means that what? The Dow got stronger and the NASDAQ got weaker, and that's why they met in the middle. So here's the NASDAQ, and it's dropping. Here's the Dow, and it's rising. So, yeah. Back to, sorry, you guys. That was a little bit of a snafu. You're going to 0. Bam. Well, way to call me out, everyone, and stick to your guns until we got there. Uh-huh. Amazing. All right, let's keep going. Sector rotation. Sorry, today was a slow day for me. Let's just, yeah, everything is good. 200 days. Who's near the top? Communication services. Even after everything's pulled back, still communication services, still consumer discretionary, still financials. Then in here we have utilities, technology, industrials, staples. Okay. That's to start it off. We have mostly growth in leading positions, but we are definitely in tune to the fact that our growth sectors have dropped. When we go to 133, I want you to notice that even of the growth sectors, who's helping us? Discretionary still on top. Communication services still on top. Financial still on top. And then there's a big drop off. And who's down here? Utilities, industrials, staples. Technology's in a bit of a struggle, right? We take it down to 66. 66 days is the last 3 months. So it's a 9-month, 6-month, 3-month, 1 month. 9, 6, 3, 1. So even here at our scoring, communication services staying pretty good. Okay, that's a growth sector. That's positive. Financials, growth sector. That's positive. Healthcare, a little bit more defensive, a little more neutral. But it's right? There's staples. Oh, look at that. That's a little bit more defensive. So we have financials and communication services staying strong. We have staples increasing. Remember, we did a search of staples and added like 4 or 5 consumer staple stocks to our repertoire. Who's down here? Look at technology. Technology's really, really fallen off. Utilities is kind of sideways, so there is a defensiveness here. What was our score last week? 0.75. Oh, gosh, yeah. We still have a couple here But the mix of defensiveness, yeah, it's at least. I'm gonna go ahead and drop mine to. I'm gonna go ahead and drop mine to a 0.5. Honestly, you could probably take it to a 0.25. Where did everyone end up on their sector? I still see bullish with communication services and financials. I don't know. I maybe even should put this to a 0.25. I actually feel like we lost a good bit of ground with technology dropping and with industrials dropping. 2 down. We still have 2 up, and then staples. Yeah, I'm a 0.25. I'm taking it down the full half a point, which was interesting because it was so strong for so long, and then once it fell, look how fast for me it fell. Anyways, like I mean, at least for everyone else, only 2 of 5, and then consumer staples made a pretty big jump up into that leading position. So that's for me what took me from the 0.5 to the 0.25. Yeah, we lost a lot of that there. Okay, let's finish with the VIX. Wow. Okay, that was unexpected, but it was bad. Let's go finish with the 22-day. And what do we see here? Who's at the top? Staples, defensive. Utilities. Why won't you show up with your name, utilities? Utilities, defensive. Healthcare. Yeah. So if there was like a question, if I was between a 0.25, if I was like, I don't know, should I drop it to 0.5 or 0.25? And this was the tiebreaker. This tiebreaker would tell me to go to the lower score. This is straight up defensive on this short term, right? That's in the last month. Now here's what's interesting, you guys, right? This is post inauguration. This is our sector rotation post inauguration. What are we seeing? We're seeing defensive alignment. That's concerning. That's concerning for sure. Yeah. So Stevens already upticked his bearish trading. I agree with that. However, we want to be very careful not to, put bearish trades on at the end of 6 days down, just like you wouldn't put bullish trades at the end of 6 days up. So unfortunately, the hope that came with the bullishness at the end of Friday, if you have some bullish trades, you hope they keep going. But if that hope fades fast, guess what that hope brings? Bearish trade setups. Just like we buy in uptrends when the sellers fail, because when sellers fail, we think that the buyers are going to come smashing back in. Bearishly, we get in when the buyers fail. When the buyers fail to push it any higher, you're like, oh my gosh, you guys failed there? You only pushed it there and now you're done? Oh, that's not looking good. That's when we see things start to fall. And so that's what I want you to be aware of. If you're looking at increasing anticipation for that, and I can tell you that this week, if we see bulls fail, there will be a bear alert or two, right? We will go that direction. And then if you remember back, I said, what's the other arrow you need in your quiver? If you're an options trader, you should be thinking about or learning things that are delta neutral, like iron condors and butterfly spreads that work in neutral markets in higher volatility parameters like we have now. Speaking of volatility, let's go finish the analysis for the day. Any questions about any of that? Yeah, that was ugly. That was an ugly sector rotation. So sector rotation had lasted for so long. It just like this beacon of hope for so long, and then it just fell apart over 2 weeks. It just was like, ugh. The VIX. Now you might be thinking, do we drop it again? This is a tough score. I kind of feel like so here's the thing is this was our high. And last week, 1, 2, 3, 4, 5. Last week, let's cut it off. Let me put this was the cutoff between last week and this week right here. Okay. Now, last week with this candle, we took out this high. And we said, we took out a high. We took down a minus quarter of a point. So that was a minus 0.25 right there. Now, since then, if we think this was a high, we took that out last week too. Right? We took those highs out. What does that tell us? It tells us that the fear levels that we saw last week, this is the VIX, this is the fear indicator. We're looking at this in an inverse correlation. This going higher makes us makes us think that things are worse. Yeah, I think we need to take another quarter of a point, because now for taking out this high over here, we didn't take out these. That's the next level. We got close and touched them. And if we get through that, unfortunately, the next stop could be up there at 28. And you can see we started to come back down. Now, here's the deal. It looked like it was trying to do this, but because of this high right here, it never actually did that. So I am going to take minus 0.25 away. And as of right now, I feel like this thing is coming down. If it comes down here to 18, right there, that would be a higher low, and that would be concerning, right? That would be very, very concerning. If this can come all the way below that, then I would be less likely to think that way. Yeah, this is going to be an interesting journey for us watching the VIX. We're going to have little, and if you're not comfortable with the VIX yet, as Sandy just said in the comments, stay with us on that. It's worth it to learn. To learn the VIX, if that's all you learn in like a 3-month period hanging out with us, I don't care what you paid for it. If you learn how to use the VIX to give you that insight into institutions, they're the ones who move the market, you will have paid for it. But if you stay with us, you'll learn some things that'll really help give you subtle indications of what's going on. Again, this is what we say. If what we're talking about has already been talked about on the news, it's worthless. We feel like we're too late. My expectation is what we're saying should be discussed a week or two from now, and we'll be like, yeah, okay, we already had that. It's already in our soup. We've already tasted it. We know what to do with it. All right. Do I not trust the rally? I trust that rally only so much. That was one end of day rally at the end. That rally only brought us down to a 19. A 19. Thank you. Clint agrees. He says, I don't think we'll know. I agree. And that rally, if that rally only comes down into this 17, 18 area, it's holding the escalation. It's holding, and I'm concerned about that. So, yeah, let's see. I mean, like I said, Sandy, I hope, because I do have a couple of bullish trades that I'm carrying through. So, yeah. All right. Let's get to the watch list. That I was so slow today, so I apologize. The good news about the trading plan is just simply that if you have your record keeping in place, all the analytics are there now. You can go look at them to your heart's content. But in the meantime, let's get to the swatch list of ours. Apple. This is a beacon of hope for the market. Apple. Apple is a tech leader. if that can salvage itself. Final score. Sorry, you're right. 2.5. I'm at 2.5. Anybody else? Better? Worse? Is anybody lower than me at this point? That was a pretty nasty drop. That was a 1.5. I'm super concerned about that. We were in a nice 4 to 5 range, and now we didn't break up to 5.5. We broke down to 2.5. So I'm definitely looking more and more towards bearishness. I like Apple. Again, I like that Apple's there doing that. Amazon is in a consolidation. There's a no for me. I do still like Baba. I think Baba's got some ability, but it's a shark frenzy, so I wouldn't be surprised if that thing dropped. Financials, okay. Bank of America, it broke. I would trade the next one. I like financials doing this, at least with Bank of America, but that kind of came out of nowhere. BX didn't do it. Caterpillar didn't do it. Sienna hasn't done it. All the rest of these, look at all these consolidations. CME looks good. I'd still think about CME. CME was one that we were looking at last week. I still like Cisco. Cisco's still on my list. I'm still going to look to trade strength, right? Trade the bulls bullishly. Delta, no, it's in a consolidation. There's the Dow trying to make its pop. Duke Energy looks a little overextended, but on a pullback, I would think there's some opportunity there for us still. Fastenal. Fastenal's not bad for industrials, but it's kind of a decent house in a bad neighborhood right now. Yeah, I look at it like, I still like FHN. FHN was on my list for potential candidates last week, and that one's moving. Flex, no. Fox is not just a yes, but it's a yes in a setup. I think you could have taken that potentially as a bull flag. If you missed it, we can look for a continuation hike in Ashi. So that's another one. So our posture's dropped to 2.75. We're in the Fs, and I still have 7 stocks on my short list. So it's not like, oh, what are we going to do? We can't do anything. Of course we can. We have still plenty we can do. But not GBTC, not GEV. Gold. I think gold, if you like it, could be setting up for another potential inflation-motivated run. Google, no. Goldman, maybe. I'm going to still put Goldman on my list as a leader, but it's because it's still flirting around that 50 right there. Robinhood, no. HTHT, I still like enough to have on my short list. On a hiccup potential, Howmet, that was one that we liked. That one's moving. Gave the signal right here is the signal that we would have looked for. IBM, I still, I don't know. Kind of feels channeling. I'm actually going to say no. I don't. I think it's just 2 same highs, 3 same lows. IP. I'm going to say no, and as such, I'm going to kick it off my list. If I'm not going to trade it there, I'm not going to trade it at all. KMB, we need more of a pullback, or else that might be the broken flag, quite honestly. You might look at a continuation trade there. Coca-Cola, similar. Kroger. Kroger was one that was nice, but you're close to earnings, so MasterCard I still like. Actually, I need to put all 3 of those. KMB. You'll notice what's moving into our favor now. Defensive. KMB, Coca-Cola, Kroger, consumer defensive. MasterCard. Credit still looks good. I still like Meta. It's sitting on the 50, still setting up. I'm looking for it. I think Microsoft is, it lost this, but it still held the higher low from over here. I'd still put that on my list with Goldman. Microsoft is a no. NDAQ, I still like. Netflix still good. Possibly building a trade off of the 50 here. Nvidia, not for me. Palantir, not for me. PM looks great. Setting up. PRMB looks like it has some possibilities. Where were we? Roblox. Not yet. Reddit. No. Look at Rocket Labs just trying to salvage but falling apart. SE. I think SE on a hiccup. We got to look at earnings though. Be careful with that. Talon. I think if it holds the 50, still worth a consideration. Toast. Nope. Under the 50. TPR. Holding on. Still looks bullish. Come on. Let's go. Tesla. No. Tesla. Lower high. Lower low. If Tesla rallies and does not get beyond this level here and starts to roll over, I will look to trade it down to 250. Yeah? Would RKL would Rocket Labs be good to watch? For me, it's excommunicado already, right? It's gotta do what? It's gotta get up here and then back down here, and then I'm like, oh, okay. Okay. It's got to pay the penance. Visa. Visa looks very strong. Very, very strong. TSM. Sorry, I missed this one. No. Twilio. No. VFC. Yeah. Yeah. Higher low coming in right there. I'd think about it. VIK. I don't know. I'm not going to put it on mine. You're welcome to put it on yours. Walmart. You guys know I like Walmart. I'm looking for something there. I'm not sure what, though. And XPEV on a pullback? Maybe. Yeah. I mean, there's still plenty of things that are bullish and moving in a bullish way. But I'll tell you what. That was a big drop in our posture. If things continue to chop, if we see the market try to rally this week and fail, then yeah, if you're new to it, get ready to paper trade bearishly. If you're ready for it, get ready to trade bearishly, right? Our posture dropping the way it has, those doors are open. Everything that we've talked about that would say, hey, you know, if you've been dabbling in it, yeah, we've talked about dabbling. Now it's starting to really accelerate. There's a lot of room to go, even for just a correction on the S&P. We're sitting around a 4.8% mark. 10 or 12, pretty easy, just on a correction. So there's some downward potential, and if it's going to chop around, let's be ready for it. So year-to-date average scores 4.28. All right, questions, comments, concerns. Don't forget, we're on record keeping. Or no, we're on analytics. The only way to have analytics is to have record keeping done. So, a couple of stocks to throw out there. Bob says, let's take a look. FI. Strong. Fiserv. It's a good one, Bob. Love it. Love it.
This is a reminder. Water the bonsai.
I have a reminder to water my bonsai. I'm adding that to the list, Bob. Well thrown out. Oops. I deleted one that I didn't want to. Let me add this. FI. Nice. The rallies we had anticipated. Yeah, we're not getting, right? We're not getting those buyers. NI. Did I just type another symbol? Did I add it without vetting it? I did. Let's hope it's a good one. I have to go find it. I like it. Bob's bringing. I told you, Bob is a solid. Levitt, XYL, and AEE. AEE. There you go. Bob, well done. Thanks for bringing them. Anyone else ever have anything that you want to throw at us? Always welcome. Okay. Always helpful indeed, Sandy. We'll be back tomorrow morning, 15 minutes before market open, 9:15 a.m. And you might be thinking, nothing's changed. Everything has changed. Everything. Futures open tonight, 5 p.m. Eastern. Things start moving, right? We start seeing people reacting, and by the time we come tomorrow morning, we'll connect it. So hopefully you'll be able to hang out with me tomorrow morning for the first bit of the market. Enjoy the rest of your Sunday. As always, can I analyze the AFRM trade? I don't have time today, Bob Walker. Let's look at it tomorrow, first thing in the market. Thanks, guys. Happy trading.
Recording stop.